with a Fox Business alert for all of you. An investigation by Fox Business has discovered emails from Citigroup dating from 2008. These emails prove that executives there were near war with top management over risky investments, many of which eventually blew up. Elizabeth McDonald joining us with exclusive details of her investigation. So Liz, what exactly is in these emails that is so damaging?
What is so damaging is these financial advisors and private bankers at Citigroup, Cheryl, were warning upper management, including Vikram Pandit, who had just stepped in as CEO, and also Sally Krawcheck, who ran Global Wealth Management, that these funds in question were pretty speculative and risky, and that they themselves were not told by the portfolio manager of the riskiness of these investments that they then had to sell and market to their very rich clients at the Smith Barney unit, which was the crown jewel of Citigroup at that time. So let's take a look at some of these emails quickly, Cheryl. Look at this first one. It reads, "This place is a mess." Another email pretty much said what has been said of Sandy Weil later on, that this place is held together with duct tape and glue. Look at this email. The issue is that clients got duped, and we as financial advisors got duped on what we were getting and eventually selling to their own clients. And also, you know, you're going to see in the story that we have on our website right now, even more disclosures. We got it out of internal transcripts of conference calls and emails. Some folks on the team felt they didn't get the full picture. Another email, Cheryl, from a top executive said to the portfolio manager, "You're happy? If you lose $500 million at Morgan Stanley or Goldman Sachs, your team would immediately get fired." Back to you, Cheryl.
But Liz, what I think is so interesting about this is this puts on the line financial advisors for Citi across the country. This is a reputational issue.
Yeah.
If you have a client that you've lost, even if it is $10,000, $20,000 in a year, that client walks away from Citi. That hurts the entire company. And I'm sure that executives at Citi did not want these emails to be made public. They are now. I'm wondering if they've responded to you.
Yeah, Citigroup. Yeah, you're making an important point here, because these funds were so fell in such spectacular, dramatic fashion, losing up to 97% of their value by March 2008, that Citigroup basically went into damage control mode because they were losing investors to places like Morgan Stanley and Citigroup. But Citi has gotten back to Fox Business saying that it has acted appropriately at all times on these investments. Disclosures were accurate and complete. Investors who bought these funds were highly sophisticated and they knew the risks involved. But sadly, according to one email, he's saying, sadly, for our firm, this is a gigantic disaster because of the lack of proper disclosure, not only to the clients of the bank, but to the financial advisors and the private bankers inside the bank who were charged with selling these funds to the bank's clients. Back to you, Cheryl.
Liz McDonald up in the newsroom. Great reporting on the story and developing over the weekend. Thank you very much, Liz. Well, that is our email question to all.